Yo, what's going on? I got a slow day at work today, so I'm actually planning on doing a few videos here while the markets are live. So I'm gonna do this one. Hopefully I can make these kind of quick, but you know me, I like to ramble a lot. The first one that I actually want to look at here is something I did a video on a long time ago, or maybe a couple months ago here, which was Tattooed Chef. Once I can pull it up, look at how many stocks I have here, huh? This is going to be the first one. I have a few more I'm going to go over, so if you guys are, listening to your AirPods at work, or you have the day off, or whatever the case may be, you guys can, start to listen. So, Tattooed Chef. Start off with the daily time frame. I guess I can leave all my indicators up. I'll probably take the moving averages out at least. So what we can see here is this. Actually, I'm going to take everything off just to go over it quickly. So what we can see here is we had this gigantic symmetrical triangle. We talked about it a long time ago. We talked about how when we bought here at this 1580 level, we were looking to see this trend line hold as support, as it held here, it held here, and it held here. So we bought here the first time, which I added to my long-term bags, and I held. And we ended up, double bottoming here and ripping all the way back up. And I talked about us being able to potentially coming back up to this $20 range here, and that's exactly what we did. We ended up rolling over here, kind of, probably, well, it doesn't actually see bearish divergence, that I was going to say, as we saw bearish divergence. Potentially we saw bearish divergence between this high here on, around January and February in this consolidation, and then we saw our high here around June. And if we look at the RSI down below, we can, see that it was straight across on the RSI strength, which was roughly 77.84, and obviously this price action was not. It was a lower high here. So then we ended up rolling over, falling down roughly to the same support again, 1588. I ended up buying more in the $16 range and $17 range, adding more to my position. We came up. We actually finally broke this trend line. However, we got a tap right around this 2563, which we can see here that every time we tried to pop above it a few times, so we could make a case that somewhere between this $27 to $29 range is a very key resistance. But from my view here, this red line I have drawn straight across was the biggest key level of resistance here, that we could never close many candle bodies on the daily above, just one or a half of one, and it was a failed rejection shortly after. So as we ripped up here, we got rejected up here at this 25-26 level. We came back down to back test this trend line, and we could not hold it. Now, of course, we were holding this 2047 range. It's hard to make a case that we would hold this level here, as in the past, whenever we fell from this rejection up here, we would just go straight down, and then we'd get resistance at this 2083 and continue down. Came up, chopped around, we fell, had a fake break back up to 2220. We came down, got another resistance at 2036, and we fell down. Came up, hit this resistance, got resistance at this 2145-ish, another rejection, 2145, and then a drop. And then we came up, tapped, we dropped to, what is it? Let me guess, 2036? Because that would make sense. 2035, and it's probably 2036, and I'm not even looking. 2036. So what does that show us right there? So far, we have held the same level that we got resistance at right here. We got resistance at right here. We got resistance at in many places. And right now, what are we getting rejected at? We're getting rejected at 2145, 2145, 2145. You can see what I'm trying to get at here. And, this was the same area we got support at. Well, that's not really 2045. That's really a little bit higher, but this was support here also, roughly. So, basically what I'm getting at here is that although every single time we've hit this resistance peak at the top here, we've gotten rejected and fell all the way back, we're getting close to the end of this apex of the symmetrical triangle. So to me, this is showing me that, hey, somewhere between this 20, where is it, 2035? Is this the peak right here, over here? I want to find 2035 because that's going to be, I'm just going to put it at 2041 because that's as close as I can get just looking at it. So somewhere between this 2045 and this 2150 is going to be an area that we need to watch. Look at this. I didn't even have to look at the candles right now, and we can clearly see here that we're perfectly in this range. How beautiful is that? Now, of course, you know, that doesn't have to mean that we're bullish because we've never held this level before. But we have had 2 daily touches roughly to the same level. So to me, if we can continue holding roughly this 2040 level, that should actually be the most bullish thing that Tattooed Chef has probably ever shown. Now, you know, a lot of people might say this is a pump and dump, but it pretty much shows us here that the only real resistances that we have for Tattooed Chef is 2045, 2150 roughly, and then this key resistance level of 2550. So anytime we've gotten rejected roughly around this 2550, many times, once again here pretty much, we just basically crap shot all the way back down because there's no real support in this range, or resistance for that matter, which is what allows us to moonshot all the way up, moonshot all the way up, moonshot all the way up. I missed this one. Moonshot all the way up. You get what I'm saying? So if we were to pull some indicators in, because this is just strictly with no indicators, and I'm not saying 100% we're holding this level, because when your track history is as bad as this, it's hard to say that that's the case. However, let's pull some indicators up and see what's going on. I'm going to start with the Ichimoku cloud because that's my favorite. What do we see here? We see a lot of cloud support ranging from 2035, which could go as low as $20. We have a huge support at 2058, and we're pretty much holding above this cloud here, and we can see how it worked in the past. You know, we had that blue line here of the Ichimoku, but this was the red support here, roughly 2071 at the time. You know, that rolled up. Once we got a rejection by it, that was when we started falling. So we want to keep an eye on this cloud level here. And so far we've bounced off it here at 22, which, you know, we rolled over. And we started riding this cloud. We never closed the candle body below. We got in this cloud. When we finally dropped through it, we ended up getting under it, double bottoming, and ripping back through it. We came back down here. We started trying to hold it. We rounded up. And then we got rejected by it. We fell down. We fell under it. We tried to retest it. We landed resistance here. We fell back down. And then what did we do? We ripped above. And now we're roughly back testing this huge key area. Like anything in this area here is absolutely critical. So, you know, Tattooed Chef is either trying to do something absolutely wonderful, or could end up just either getting a harsher rejection again, could come up here, double top, and then get a further rejection, or we could actually see something even better form, which could potentially lead us to breaking out of this long-term consolidation. And this consolidation, pretty much from the blow-off top we had in September of 20. Wow, that's actually pretty wild to see that September seems to be a beautiful time for Tattooed Chef. Now, I'm assuming there's earnings coming up that could be a key factor, of course. But that's only the Ichimoku cloud. Now let's open up the ribbon and get rid of the Ichimoku cloud and see what we see here. So, you know, with Tattooed Chef, we stayed green on the ribbon, and then we started flipping bearish here, roughly after this drop. I mean, it wasn't super accurate on the daily. I'm sure the 4-hour usually is more accurate, but let's see.
Actually, the ribbon doesn't show too clearly. But what we can see is that we're still red on the EMA ribbon here for the 4-hour time frame. You know, we flipped red right as we broke this EMA ribbon here. We came back up. Now what are we doing? We're back testing this EMA ribbon almost perfectly. I mean, a small wick below, right? So, you know, I'm not trying to overhype it, but it is very exciting to me seeing us back test and actually start to hold. Of course, it can fake out and we can just lose the floor, and the floor can fall right out for us here. We had a MACD cross. That's showing momentum is running out. That's on the 4-hour time frame. And the daily, as of right now, is pointing down slightly. It can obviously cause some sideways action before it eventually possibly decides to fake out and run up. There's no telling exactly what it's going to do. That's going to be all in the buying sentiment. So, you know, right now on the daily, we still are looking at some further movement here, but we're showing clear signs that we're stuck in between this very, very key range. And I won't stress it enough. So we could see some more chop in here before ultimately breaking one way or the other, which, you know, I know that's a terrible thing to hear, but I'm pretty sure you heard my levels and my reasoning. On the daily, we have support down to roughly about $20 to as low as maybe 2007. We can wick below it, of course, but that would be probably the lowest that you want to see it go before you start saying, if we start getting too much rejection, we're not going to like to see that. On the 4-hour, 2005, so roughly between 2007, 2005, with potential, you know, we can definitely chop below it. We have in the past. However, I don't want to see us breaking this level. So, you know, I did personally close some of my position up in this 2450, 2480 level here. I started taking some of my profits from down here, and not just because I'm a swing trader, you know. And honestly, on my swing trading account here, because I have my long terms and my short terms, and I did take some profits here just to be safe, but not much. But look at here on the 3-hour. We're finally starting to flip green on the EMA ribbon. So this level is really, really cool for me, and I actually put a buy order in around this 2030. Actually, I put it at 2040, around this 2040 level, and I got filled for a short-term trade potentially, or a very nice swing trade. I'm not sure how I'm going to play it yet. It really depends on how this plays out. But looking at all these time frames right now, even if this thing chops sideways for a bit and ends up rounding out, we're seeing a lot of support in these areas that we never held before. So that's just something to look at, and this is all strictly based off of you know, previous historical price action. You know, we had some crazy fake outs. We had a lot of chopping really in this 1981 range as well, but to me this area was huge, so we don't want to lose it. You can see what happens when we lose it. It turns into resistance. We break it, we get massive runs. We come back down, we can't back test it. We try to chop under it. We try to close above it, can't hold it. We wick above it, can't hold it. We wick right to it, resistance. We fall, we break it, we rip. We get a lot of resistance here. I mean, roughly, you know, the range could even go as high as 2180, 2185. We can look at it something like that. So we'll just call it, we can call it $22 to, you know, 2040 or 2035. That's kind of the range that we want to look at. You start breaking $22, you start closing and holding above that level, that's when things get very, very bullish. So I'm not expecting too much price action. I'm actually expecting a lot more chop, maybe some, you know, potentially some fake outs below. So, you know, be cautious, but it's just a speculation idea, and it's something I'm seeing here for the first time in this chart, which means the first time could potentially mean that it's not going to happen. But just seeing that we're at the apex, I could, you know, I wouldn't, it's not surprising me that we're seeing some type of, you know, potential bullish structure forming that could turn into something beautiful. And just for, you know, the sake of the video, before I end it here, this here is
The target, depending on when we break it, our target actually lands up here at about $36 and $37. And you know, we can even try to see something here just to get a little bit of an idea, because you know, obviously on the weekly we notched a little bit here. No divergence that I can see. You can probably, really, if you want to see a true breakout of this, what you could do is this would actually help a lot. We can draw a trend line on this RSI here like that, and we can draw it like this, and this is going to show us, so that we're not just guessing, because the RSI is way more of a true indicator than anything you'll see. And what you do is you draw this, and you know, we can watch it on the weekly, we can watch it, I don't know if it'll look the same on the daily, but looking at this on a weekly time frame, because that's where the big money is trading. They're trading these weekly time frames. What we want to see is we want to see a break of this trend line. We've never broken it. This is how we knew it faked out. This is how we knew it faked out, and this is how we know it could fake out. So you know, that's the way that you would want to play this as a breakout trade here, if that's what you're in for, the, you know, because I do a lot of breakout trading on this channel mainly. I try to grab momentum plays. So I mean, you know, are we buying it at a top? If we bought here, we could. So that's the other thing on the downside. You have to be careful, which is why I have tight stop losses, probably below the 1970 level, really, just to risk a little bit of money to potentially make a lot. And you know, it could completely fail on us, and we could be looking back at this in a week and saying, oh wow, you made a video saying for everybody to buy the top. That's not even what I'm saying. I'm just saying we need to, you know, keep our eyes on this level. Obviously, breakout trading is risky because you're buying close to resistance. Even if you break it, sometimes it can back test and fail. So you do want to buy confirmations, of course, and we don't have a weekly confirmation yet, so that's something to look into. But yeah, I hope this video is helpful. If you're in Tattooed Chef, you know, do your own research, figure out what you want, do your own TA. You know, seeing this pattern being so close to the end of an apex gives me a little more hope that we could have some kind of bullish break, even if it ends up being a massive fake out, that it comes back down here and then rips, because that can happen too. And I've seen it shake out so many people, and they lose their whole entire plan, and then they're pissed, and then they're buying back in at the top. And you know, obviously we had a fake wick below, but roughly now it should land around 1740 roughly, and it could wick below. And then we have that weekly ribbon here that we almost bounced off perfectly last time, which, you know, as of right now it's not there, but something to consider. Yeah, so this is a long enough video. Hopefully this helps. Peace.